so in love with you.
Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in, and my aim is to bring you guys my best, most value-driven video to date. Now, listen to me very carefully. I'm gonna show you guys behind-the-scenes strategies on how realtors present deals to investors using simple price per square foot method so that you understand what a great deal is and how to instruct a realtor to work for you. Now, I wanted to hold off on showing you guys some of these tricks on how to find a great deal because the most important thing right now for me was to sound the alarm. Nevertheless, today is going to be your housing market update video, one of my absolutely favorite videos to make. Now, we're going to look at massive price cuts, not only in new construction, but also resale listings. Then I'm going to show you guys how to do a market analysis using 2020 and 2021 data. And then I'm going to show you how to do an individual home analysis to see whether or not it's a great deal. Now, after that, we're going to quickly listen to Jerome Powell's remarks on interest rates and the housing market. Then we're going to jump into everything interest rates, and I'm going to show you guys something extremely important on why price is so much more important than interest rate by comparing where we were at the peak versus right now. And you guys are going to be blown away at what I'm going to show you. And then we're going to end with inventory and channel viewer shoutouts. So remember, I'm not a financial advisor, even though we both maybe we want that. And even though my bio is as a realtor, right? A loan officer and an instructor, I teach people how to do real estate, you guys. But this is my personal YouTube channel where I get to be a father, a renter, someone that rants, someone that gets to be frustrated, and I get to talk about all things real estate. So please, like this video, subscribe if you haven't already, guys, and don't leave me hanging, please. Shoot me a comment below, but let's jump into this video and all of the value right now. First, what I'm going to show you guys is the state of my current housing market, and I'm going to show you guys massive price cuts, and then we're going to figure out, is it a good deal, is it a great deal, or is it just trickery? So I'm going on to Lennar's website right here, and you guys know that I've been basically in the Kingwood area, a little bit Porter, a little bit of Testacita, a little bit Humble, but I'm just going to type in, I typed in Porter here. And as you can see, here's Lennar's inventory. And, the first house off the bat is almost a decrease of 20%. It went from 291 to 250. So a massive price cut. Again, these are price points that are a little bit more affordable, you guys. And they're doing over 10% price cuts. But we need to figure out, is this a great deal? Is this a good deal? What are we looking at here? Is this just advertising? So that's what we're really going to look at. But first, let me show you some massive price cuts in resale homes right now. So you guys may remember me bringing this listing up a few weeks ago, but I want to point out that there has been an additional price decline. As you can see here, I highlighted this 31st of October. There's an additional price decline of $60,000. Okay. So this is going to be kind of our example. And as you can see here, this property was originally listed at $915,000. It was price cut a total of $400,000 for a price cut of 43%. So that is a massive price cut. This is an active listing. I got this information late last night, but you guys, 43% markdown. So now I have to show you, is that a good deal or not? So is it a good deal or not? And that is really the only question that we should be asking ourselves. Are these price cuts enough to offset the massively skyrocketing interest rates right now? In order to determine that, we have to look at data from 2020, 2021, and subdivision specific information pertaining to that home. And I'm going to show you guys all that information right now. And I want you guys to pay attention because this is the information that a realtor is going to normally provide an investor so that they know they're getting a great deal. And this is also something that you guys can instruct your realtor to do for you. Let's start. All right, guys. Now, as an agent, I have access to MLS, and this is har.com, okay? So I'm going to show you guys essentially where we were at in Houston in 2020. So all of our data we're basically going to compare to 2020. And I'm going to show you guys how to do this, all right? So, and again, any realtor can do this, any realtor at all. All you do is you go to sold status, and we want to see all of the properties in Houston, because I'm going to take a look at Houston first so that we kind of have a gauge to see is Kingwood outperforming or underperforming, right? So I kind of want to just see overall how Houston is doing. So we're going to select the date range right here, obviously for the full year in 2020. Okay, and obviously I put sold here. Now I'm going to go down here and I'm going to put Houston, all right? Because I want a lot of data. Now you're going to see that it has over 5,000 matches. I'm going to hit results. Okay, so now I have this massive list of over 5,000 sold properties in 2020. So I'm going to select all of the data. I'm going to go down to stats. I'm going to hit tubular, and let's see what the average price per square foot was in Houston in 2020. So as you can see here, in 2020, the average price per square foot in Houston was $136 a square foot. The average sales price, closed sales price, was $287,664. So now we kind of have a gauge, and we know that in Houston in 2020, the average price per square foot was going for $136. Now, let's take a look at Kingwood. I'm going to come back here and we're going to do the very same thing, but we're only going to ask for data for Kingwood. And again, for 2020, right? Okay, so let me just fill out the dates to December. And we're going to scroll down here and then we're just going to select Kingwood. Okay, and then we're going to do the same thing for 2021. And then we're going to look at active inventory to see if there's any good deals right now. All right, and as we can see here, the average price per square foot in Kingwood for 2020 was $99.74. Okay, so $99.74. So again, we're going to come back here and now we're going to look at sold data from January 1st of 2021 so that we see what homes we're selling for on average in Kingwood in 2021. Okay, so that's the date range right there. Let me put in the location as Kingwood. All right, as you can see, the average price per square foot was about $127.30, and the average home closed at $375,501. So you guys may remember me saying I'm looking for properties that are $120 and under a square foot, so essentially lower than the 2021 levels. So I hope this is starting to make a lot more sense. But now let's look at active listings and see what the active listing is selling for on average in Kingwood from a price per square foot aspect. You just go to active right here. We're going to scroll down to Kingwood. Once again, we're going to put in Kingwood right here. Okay. We have 85 matches. We're going to put results. It tells us our average price per square foot right now in Kingwood is selling for a whopping $143.11. So I'm going to put these things on the screen somewhere because now we're going to look at specific properties just to determine whether or not is it a great deal? Is it time to buy? What am I looking at exactly? Now that we have data from 2020, 2021, and active listings, we can now determine from a price per square foot aspect whether or not a deal is a good deal or not. So watch this next part of what I'm about to show you. This should absolutely blow your mind because it's extremely easy to do. So I'm going to go back to MLS here, and obviously only active listings are shown. So I want to look in Kingwood, which is where I've been keeping you guys in this little market, so you guys could do the same thing. So I know there's 85 matches. Now I'm going to put results. Now watch what I do next. Now I'm going to categorize these 85 properties by price per square foot. Okay, so what do you guys see? Essentially, I can immediately tell in Kingwood what prices are going for under market value. Do you see that, guys? So what I know is in 2021, the average price per square foot in Kingwood was $127. I also know that active listings right now, the average price per square foot is $141. I know that 2020 levels, okay, you guys, the average price per square foot in 2020 was $99.74, which means this first listing right here, do you guys see this? Is under the 2020 averages, okay? So now we got to figure out, is this a good deal? Now, the first thing that we're going to want to look at is we're going to click on the listing. And the number one thing we got to figure out is the house in super bad shape. The way I do that is at first I look at the pictures. Now, shockingly, and I looked at this last night. I almost actually went there this morning, but shockingly, this house is in good condition. Look at this. It has nice floors. It had a nice kitchen. you know, this is actually surprisingly in nice shape. This is a huge surprise. I'm really glad that we're using this as an example today. But as you guys can see, this home is in good shape. So now the thing is, we have to go even more local and to determine whether or not is it worth our time to look at this house. So the next thing you want to do, because everything is so super local and we can't just use price per square foot, we also have to use location. There's also rent ranges and things like that. But the next thing I'm going to do is look at the property subdivision, because that is hyper local. Okay, so I'm going to look at the property subdivision, which is in North Kingwood Forest. Okay, so I'm going to copy this and now let me go back. All right, so I'm back here. I'm going to click sold and I want to see all of the properties that sold in that property subdivision in the last 6 months. So I put sold here over 180 days. I'm going to scroll down right here. I'm going to paste the property subdivision. Okay, so we can see here that a lot of these properties, all of these properties are selling for well over $98 a square foot. Do y'all see that? So that's pretty shocking, but let me put it in an average form right now. Okay, so here's the average information, and this is what I want to show you guys right now. And really, hold on real quick, because I'm going to bring out a calculator and tell you guys how much potential wedge or profit is in this specific house. But you can see that on average over the last 6 months, the average property sold for $141 a square foot in that subdivision. But I also want to point out something else that I'm constantly looking at in my market, which is the average square footage is only 2,205 square feet. So the subject property that we're looking at is way bigger. And generally when something is way bigger, you're not going to get the same amount per square foot. But for the sake of this video, let me now show you guys how you determine how much value is potentially in this property. So in order to do that, I'm going to bring up a very simple calculator. So we know that the average price per square foot in that subdivision over the last 6 months is $141. We know that the property that we're looking at is selling for $98.36 per square foot. So I'm going to subtract from 141 the $98.36. That leaves us a difference of $42.64 a square foot. Now, say the property was in bad shape and I wanted to renovate it and it was a similar size to other houses. What I would do, just to see how much potential profit is in this home, I would multiply 4264 by the total amount of square footage for the property. So I'm going to go times $3,660. So let's see how much potential profit is in this house. So as you guys can see here, in that property, there is a potential value of $156,000. So my thing is that worth my time now as a potential homeowner and a potential investor? I would say $150,000 is worth my time. But the first thing that comes into my mind is, did that home flood? And is that home too big to sell? Because there's a reason they can't sell that, right? So there's more than just meets the eye, guys, but that is a general way of using price per square foot to review a whole bunch of data to go into really any market and determining what is selling right now for under market value. So I really hope that helps, guys. Let's move on to the next segment now, which is, let's briefly listen to Jerome Powell and see what he has to say about interest rates and the housing market.
As you look around the economy, the clearest impact of your tightening so far has been on housing, maybe some venture funded tech companies. It's been relatively narrow in terms of labor market, consumer demand, a lot of sectors you don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that you're crimping housing supply in ways that might cause problems down the road?
I don't know that the channels through which policy works have changed that much. I would say a big channel is the labor market, and the labor market is very, very strong, very strong. And households, of course, have strong balance sheets. And so we go into this with a strong labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think. So, sorry, was I getting to your question there? Housing, the housing part of it. Yeah. So, we look at housing. Of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline. You're seeing housing prices growing at a faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was very much more carefully managed by the lenders. So it's a very different situation and doesn't appear to present financial stability issues. But no, we do understand that that's really where a very big effect of our policies is.
So you guys, Jerome Powell is telling us what's happening. A lot of these investors are just waiting for the pivot. They're just hoping it's just so ridiculous. All of the people saying they're pivoting already when inflation is still running away and the job market and labor market is still soaring. But it is what it is. I'm going to pull up the rates, guys. This is Fed economic data, 30-year fixed rate mortgage average in the United States. Remember, your interest rate will be 50 to 75 basis points higher. Now, also remember my last video, I said that I suspect that interest rates were actually going to go down this week. Do y'all remember that? And do you remember why I said that? Only because of midterm elections, right? I think the data is all messed up. So as you can see here, interest rates actually did go down to 6.95%, which is a difference from last week's rate of 7.08. That is a difference of 13 basis points, or an increased purchasing power amount of 1.3%. But, as you guys can see here, this is the decade view right here, or the 10-year view. Rates are much higher, right? They're much higher than they have been in the last 10 years. And, with that, overvalued houses. So this is making things extremely unaffordable for any buyers that are not prepared, for any poorly leveraged buyers. This is absolutely devastating. But I want to guess where the trajectory of the interest rates are going to head to next week. Now, I believe we're going to have a bump up in interest rates. I'm going to guess the average next week is going to be 7.15%. Go to my community tab and vote on this week's poll and let me know whether or not you think they're going to be up or down, but your boy got it right again on the downward call. Now I want to show you guys something extremely important. So please, you guys, pay attention to this next part, because I'm going to give you guys a comparison as to if you purchased at the peak in June versus if you purchase right now, because a lot of people are trying to scare you saying, oh, interest rates are too high now, you've missed your opportunity. But the reality is the difference in payment from peak to right now is $95. But the houses are $31,000 cheaper, making it 27 years before you recoup that money. Do y'all get the point here? In other words, price is way more important than interest rates. But let me show you. So in order to show you, I first have to determine what the median sales price was at the peak, okay? And I'm looking at the national average information from Redfin. And as you guys can see, it peaked in June 19th at a median sales price average of $392,000. I'll put that on the screen somewhere. Again, that was on June 19th. If we fast forward to today, guys, which, by the way, we're very near an average of year-over-year price decline, but that's another video for another time. But you can see we are now out as of October 30th. We are at an average median sales price of $361,000, okay? So again, $392 at peak, currently sitting at $361,000. The difference in that is 31 grand. But now let's see where the interest rates were back then. All right, here's the Fed economic data interest rates, guys, and we're going to go back to June 16th right here, and we're going to say the average interest rate at the time of the peak was 5.78%. Now, all these people are saying, you better buy now, interest rates are just going up. Let's see how much that really matters, okay? So we're going to use 5.78% for the peak numbers. For the current numbers, we're going to use the interest rate of 6.95%, okay? So I'm going to put that on the screen somewhere, and let's get started looking at this info right now by pulling up a mortgage calculator. And I'm just going to use the median sales price as the loan amount. I understand that the loan amount is not the purchase price because, I mean, I have 20 years of lending experience, so obviously, but for the sake of ease and smoothness of this video, I'm going to use median sales price as the loan amount. So let's go with June 1st, which had a median sales price of $392,000 and a median average interest rate of 5.78%. Now, as you guys can see, if you would have purchased at the peak, on average, your payment's going to be roughly $2,295. Now let's change this information to the current information, which is a median average sales price of $361,000. Let's increase this interest rate to 6.95%, making the payment $2,390. Okay, so let me pull up the calculator once again, and I'm just going to show you $2,390 minus the peak payment, which was $2,295. Equals a difference of $95 a month. So if you buy right now from peak, you're going to be paying on average only $95 per month. But remember, you're now upside down $31,000 on average if you purchased at peak. So let's see how long it takes to get that money back. I'm going to take the $95 difference a month times 12. So yearly, that's $1,140. All right, let's take the $31,000 difference divided by the yearly difference, which is $1,040 equals over 27 years, you guys, to get that money back. But that's if values don't keep going down, and that's if you never refinance into a lower interest rate, which is extremely unlikely. So more than likely, you're not going to keep the original terms for 27 years. So it is clearly smarter if you waited. Do you guys see my point here? Price is more important than interest rates. Now let's take a look at inventory, and we're going to look at monthly supply of new homes in the United States. Now remember, you guys, if we have anything over 6 months of supply, it's considered a buyer's market. You guys know that I have been saying for a few months now that new construction is a buyer's market. As you can see, this was recently updated October 26th. The months of supply is now 9.2 months of supply for new building. More than likely, you guys, this is going to skyrocket up because, quite frankly, the industry is almost dead right now. And that's a fact. I see it in lending. People are still buying. People are still spending money, but it is being crushed right now. So we got 9.2 months of inventory for new home builds. So if you're in a metro area with a lot of new construction, consider yourself lucky. All right, but I'm also going to pull up the months of supply for Redfin, and this is for all properties. Now, I want to make clear that this black line represents current levels of inventory or weeks of supply. This blue line, you guys, is 2019. So I just want to point out that in 2019, at this time of year, we had 15.9 weeks of supply. Again, in 2019, we had 15.9 weeks of supply. Right now, we're sitting at 13.1 weeks of supply, which means we're only off 2019 levels by 2.8 weeks. So how close are we to having more inventory right now as far as months or weeks of supply than 2019? Look at how close we are, you guys. I suspect the months of inventory or months of supply to be higher than it was in 2019 before the end of the year. So let's keep our eyes on that. It's going to be really interesting to follow. But the reality is there's really no mystery to most of us on what's happening in the housing market. Rates are skyrocketing. Unaffordability is ravaging the housing market. Inventory is going up. There's way less demand. All numbers are historically down right now. So it's really easy to see that, you guys. But now what I want to do is I want to quickly give this week's shout outs. Now I want to start with last week's gift card challenge. I've already sent the money PayPal, but Jesus Christ, son of Mary and Prophet Allah, actually won the challenge. The question was, is it a good time to purchase a home right now because won't interest rates just keep going up? The answer is don't give in to fear of missing out. Regardless of how good of a deal a listing seems, houses are still insanely overpriced compared to their pre-pandemic levels. Patience will be rewarded. I think that is a great answer, you guys, especially for any potential first-time homeowners. You don't want to listen to investors just spewing ego and arrogance. I mean, we got to first listen to 5 minutes about how they've been right and how long they've been investing. I mean, it's a complete waste of time. No one knows your situation like you guys, and not a lot of these people understand the struggles and the turmoils of everyday normal people. Okay, so keep doing good. Great answer. Let me now crown this week's first comment champion. All right, the champion this week goes to my man, Julius Magno. So Julius, you made it, man. He actually got 3 videos first on. So he's number 1 right now. We got a new champ. I'm going to say number 2 was Troy. Troy got 2 first place. And as you guys know, Troy was the original champion. So Troy's out there. Y'all better not motivate Deuster. That man was first every single video for like 2 weeks. Julius, congratulations, brother. I really appreciate your support. You are the new champion. Second place is Troy. So real quick, guys, I wanted to give you a membership update. So a couple things I've been doing in my membership is I'm doing a new video where I'm going to go to a construction site. So I'm asking my members, should I just walk into the construction site or should I ask for permission? 70% of the members said just walk into it like I own the place. So I'm just going to walk into this new construction site. And then my next question was, should I wear normal clothes or construction clothes like a belt and carry a ladder? And thank goodness they took mercy on my soul and they said just normal clothes. So to all my members, thank you for taking mercy on my soul. But I would have rocked out a costume, especially being that we're on the end of Halloween. So there are a few things that I want to pinpoint. Number 1, contact a realtor and have them give you a breakdown in the market that you're interested in purchasing. Figure out what the median sales price and the price per square foot was in 2020 and 2021 and throughout 2022. Again, you guys, so that you understand what a great deal is. Now, remember, number 2, price is way more important than interest rates. Homes are roughly $95 more a month right now, but on average, $31,000 cheaper compared to where we were at peak. Now, remember that when people try to scare you about interest rates, okay, so remember that. Now, number 3, we are fastly approaching price declines that are starting to create good deals, but not necessarily great deals. So stay patient, you guys, and you will be rewarded for that. Now, as always, you guys, I really hope you guys got some value, insights, and perspective from today's videos. And if you're out there investing in real estate, you know I wish you luck, and I hope you win.